when you built it is not when you get sued. When you replicate a similar design over and over again, you become an attractive legal target. And that doesn't mean you did anything wrong. It just means that if somebody sues you, they're not suing you as one homeowner. You're looking at a plaintiff's attorney who's going to recruit a whole bunch of folks, and they have a homeowners association by which to easily identify those whole bunch of folks. I mean, these attorneys have had since 1980 to practice on production home builders, and the legal science, as we'd call it, is pretty sophisticated. So production builders really face the biggest challenge there unless and until they are geared and ready to deal with it.
Welcome to the Builder Straight Talk podcast with your host, Michael Treacy. Get the unfiltered truth from the trenches of construction, real estate, and funding. This episode is made possible by our parent company, Sound Capital, funding built for builders.
Well, hey there, friend. In this week's episode of Builder Straight Talk, I had the pleasure of sitting down with a gentleman by the name of Treacy Duerfeldt. And we're going to talk about the most overlooked threats that are facing production builders. And that's insurance risk and financial exposure. These are the dragons that are waiting in the weeds. Now, a little bit about Treacy, his backstory: longtime construction insurance expert, worked across underwriting, risk management, captive insurance structures, spent decades helping builders just like you uncover the risks that are hiding quietly on the balance sheets, things that are sucking away the money that you're making. And it threatens the entire company if you're not properly managed. So in the conversation, we explore how builders can protect themselves in a world where construction lending is tightening and traditional insurance doesn't always cover the risks builders actually face. So some of the topic points: the silent financial risks many builders are carrying without realizing it, why traditional insurance often fails to cover the builder's biggest exposures, how captive insurance structures can help protect the builder's balance sheet, what builders should be doing now to prepare for tighter construction financing, and so much more. And speaking of so much more, by the way, with a simple click of your mouse, you can subscribe, like, and share so much, maybe so many more builders like you can be experiencing what we're doing here at Builder Straight Talk. Remember, there's no advertising here. It's just great, compelling content from experts that we have conversations with. So again, pretty please, with your mouse, subscribe, like, and share. Without further ado, let's get into this conversation with Treacy Duerfeldt. I know you're going to enjoy it. Well, Sir Treacy, thank you for being on today's call. I say that with majesty and respect because we're going to get into the inky dark waters of insurance, something I know very little about, but I suspect it's one of those things that you don't need it until you need it. And
that's an understatement. Insurance is the poorest form of financing known to any human being. When you buy money from a bank, you know what interest rate you're paying up front from year to year. It's spelled out. And, if you don't use that line of credit, you don't pay any interest, right? Well, with insurance, you get to pay the interest up front year to year, and you don't know what price it's going to be. And then if you have to access the line of credit, you already know it's a terrible day. And then you get to pay it back over the next 3 to 4 years in elevated premiums. So you tell me what kind of financing that is, Mike.
We'll get into that as this unpacks. I don't want to burn any bridges and make any offenses yet. It's too early in the story, Treacy. So let's rewind the clock of all the things in the world that you could have got into. Football, espionage, pole dancing. What pulled you into insurance?
The professionalism of one man. There's a fellow named Greg Green, and it took 6 phone calls to drag me into an interview. I'd been a little over a year out of college. I was getting ready to set the publishing world on fire for Thompson Papers out of Chicago. And my mentor had said, "You got to meet this guy. I know you don't like insurance, but you just got to meet this guy. So bring your wife." And so Joyce and I went to this room, and it was at the university's placement center. And Greg Green was there in a 3-piece suit. And it wasn't just the suit. I mean, it was the tone, the voice, the confidence. And he asked some really good questions about what I knew about insurance. And that kind of revealed I didn't know much. And then he asked about what kind of training I think I'd need. And it went one step at a time. Then I got involved in a 1-year training program. They paid me to learn. Okay. And only $100 123 people are interviewed and only one makes it. Okay. So I made the cut. And then you have a trainee group of 6 to 8 people, and each phase, there's 4 phases. Each phase is required to cut one trainee. Okay. So it was a bit competitive. And so when I entered the insurance world, licensed and ready to go in 1990 and in Indiana at the time, I had really been challenged by the insurance industry. And that's the kind of thing I respond to. Give me a mountain you say I can't climb and I'll go there.
Is that, so the training that you received, is that indicative of all companies, or is that something specific to the company you were applying for?
The company I applied for was called Federated Mutual, and they have association specialties, industry specialties, and commercial insurance of 13 different industries. It's a very narrow specialist, a very well-established company. I was with them for 10 years. Corporate life and I are done now. I'm much more of an entrepreneur, as you might guess. But the training is unusual. Many times you'll go through a 6 to 8 week training program unpaid with most insurance companies. Thus, many people can be trained briefly in insurance, but very few of them are refused into the program.
Is there any kind of licensing? Like, for example, if I'm a real estate agent, I have to take courses, then I'm licensed. I pay insurance like errors and omission,
Oh, yeah.
and I belong to an association. Is that similar?
Yes. Very similar. As an insurance professional, you have to have a license in continuing ed. That's where I focus these days, is on insurance education. We'll talk more about that. But you have to maintain your insurance education, and you have to be licensed with background check and such. And that licensing test, which locally in Washington State, I've been a part of correcting and or modifying as a volunteer for the Office of the Insurance Commissioner. We simply put, we do have to keep up on things, and that's important for you to know.
I guess I should give you the opportunity here to introduce yourself and talk a little bit about the company that you're with. So, and then how long you've been doing this.
I've been in insurance since 1989. I recently, in 2022, sold my business to the World Novatate Group. And while I'm still retained by them in a coaching and strategic capacity, I focus now on 2 other areas: captive consulting and construction insurance risk education.
Okay. So you've done loss control, production design, you've owned your own independent agency.
Yes.
You've launched and sold wholesale construction insurance companies. You've got a really unique vantage point. So I guess my question is, what do traditional agents misunderstand about the production model?
About the production building model, correct?
Correct.
Yes. The language might be a place to start. I think many insurance people understand as a consumer of homes what they've been exposed to. But recently we were just talking about manufactured housing, stick-built housing. The real nuance between the two, for example, has insurance implications, tremendous insurance implications. But when you also look at subcontracts and their language, you look at scope of work for each of the subcontractors, you look at the names, varieties, types, and exposures involved with each subcontractor. Maybe an insurance agent understands home building from the home builder's perspective, but if they don't understand the risks involved and faced by the subcontractors, I'm not sure they really understand, because those are the risks of the home builder too. And so you need to have a firm grasp. Many insurance agents really need to have had some time in the field in construction. I mean, for 2 years, working my way through college, I sold roofing and siding. And then if people were too busy, I went off and did it. Okay. And that was in Upper Michigan, where roofing is kind of important with that much snow, right? And then I was an apprentice for an electrician until I got into too many crawl spaces and couldn't stand it. But I still know how to calculate circuits and things like that. Insurance agents really need to specialize to understand production building is where I'm going to go. It's not something you just go to the corner agent and say, hey, I'm a home builder, especially if you're building, more than 10 or so homes a year. If you're building 100 plus, that's a whole different category, right? And that requires some real understanding of both the business model and the real life implications. And I wish I could say more insurance agents knew that. They can, but it requires a less lazy agent, somebody who really wants to go there.
Let's focus on that milestone for a second there, Treacy. Let's say the builder that's doing 100 homes a year.
Mm-hmm.
Is there any one particular dragon that's hiding in the weeds that they should know about?
Yeah, of course, it's construction defect. When you replicate a same or similar design over and over again, you become an attractive legal target. And that doesn't mean you did anything wrong. It just means that if somebody sues you, they're not suing you as one homeowner. You're looking at a plaintiff's attorney who's going to recruit a whole bunch of folks, and they have a homeowners association by which to easily identify those whole bunch of folks. And then they start using things like destructive testing and various other methods by which to, pierce the single purpose LLCs. I mean, these attorneys have had since 1980 to practice on production home builders, and the legal science, as we'd call it, is pretty sophisticated. So production builders really face the biggest challenge there unless and until they are geared and ready to deal with it. And there are solutions other than just insurance.
If I'm a production builder, I'm trying to build the best possible product I can and satisfy as many people as I possibly can. I want a happy home buyer because they're going to tell all your friends. It sounds like this is an adversarial arena, if you will, that the lawyers are the sharks swimming in my pool looking for an opportunity to pounce. Like, is there something that the builder's doing wrong or is unaware of that he's subject to these predators that are out there? And why is it so bad?
Well, first of all, let's just look at people by the numbers, okay? I've always said 10% of people are a-holes, okay? And when you sell to 100 people, you're going to have a small percentage that will never be happy, no matter how good a home you built or how great a customer service department you have, okay? So you have to anticipate and know how to diffuse or disarm conflict, okay? And I think the better production builders are experts at this. Insurance companies are not, by the way, but the home builders certainly can be. They use tools to avoid homeowner insurance subrogation. They use tools to make sure that trades are accountable after they're done and after they're paid. There's many tools available. And I think production builders play defense only after they've been sued once. Many of them are invincible until they've faced litigation. And that's unfortunate because by that time, how many hundreds of homes have you put out there? The delay in litigation is deceiving. And what I mean by that, Mike, is every state has its own statute of limitation, statute of repose. And people can only bring suit under certain circumstances within that time period. So many people are convinced by a plaintiff's attorney to preserve their right to sue even when they know nothing's wrong because they feel like they're going to lose their rights, okay? And that has been problematic with what I call placeholder lawsuits. And the implication of that is huge because let's say you have a statute with as few as 6 years, okay? And you think, well, that's great. You've only built for 6 years and never had a lawsuit. How many homes is that plaintiff attorney can discover and communicate with? It can be a dangerous industry to go in unless your eyes wide open. And again, this isn't about buying insurance. It's about risk management. And that's a much bigger concept. Home builders can do so much to avoid using insurance. By the way, insurance people are terrible customer service reps. The plaintiff's attorney is going to run into the insurance defense attorney, and the homeowner's not going to get any happier. So it's just something we don't want to rely on unless it's absolutely necessary. Looking at all those steps before you get to that point is a real good idea.
I don't want to say cyclical, but do you see more litigation is happening now than before? And is it tied to anything? Like if the market's really good, that expression, all boats rise and fall with the tide. If there's more homes being built, are there more litigations, or is it the other way around? When the market's tighter, is that when people start to litigate?
Remember that delay, that statute of limitation, statute of repose? So, I think it's like a pig in a python. It takes a little while to get out. And of course, it all's poop at the end as far as I'm concerned. But when you look at when times are good, that may be when you're building a whole bunch and you're trying to meet demand maybe more quickly than you should. And then when times are slow, you have the time to pay attention and be more selective with your subcontractors. So when you built it is not when you get sued. Okay. Again, it's nearer or after the first couple of years. That first year when you're as a production builder doing the fit and finish period, sometimes some builders like my friend John, they use a 2-year period just to insulate themselves. And you do anything that makes the customer happy. Okay. That's a great way of on the front end, sending a message that I'm here for you. Don't just go to a lawyer. But when you have the period after that 1 or 2 years and you're dealing with some restrictions as to what you can file against your warranty, some homeowners get a little more upset, and then you're into year 5, year 6, year 7, and then you might be more irritated then. So really the lawsuits are coming many years after you've built something as opposed to when you built something for construction defect. I mean, everybody can have a job site injury. I mean, that's the catastrophic thing that everybody worries about, but that's not where the money's been spent.
You've been banging the drum for years now, trying to get builders to wake up to what's happening out there. As I say, the dragon's in the weeds. Could we synthesize it down to, is there one dangerous sentence that you've heard production builders say? And after they do, how do you correct it?
That's a good one. Graber's horse is one of my 4 rules of doing business. And it's, you have to care. So as soon as a builder says, I don't care, and then follows it with, I have a single purpose LLC that will protect me, or, I'm confident that I build a perfect home. Well, I'd like you to tell me that you sold it to a perfect homeowner. So it's the cavalier or dismissive attitude of I don't care that will definitely suggest that at some point either the builder's too frustrated to carry on, or they are too confident to correct any problems.
If I were to say, talk to me like I'm sick, so put this in plain English, is there a situation where builders are overpaying versus dangerously underpaying and not being protected?
Yes, of course. Insurance companies, not unlike banks, can take advantage. And yes, I understand the financial industry has primarily a lot of integrity, but again, we have thousands of builders out there. So you're going to have a small minority of builders that don't take competitive quotes and don't know coverage well enough to compare it accurately. And so as a result, primarily due to a lack of attention or education, they'll overpay for their insurance.
What about claims like any insurance can be, rejected? Are there any 2 or 3 questions that a builder should ask before they sign on the dotted line to avoid rejections of claims that they put in?
Absolutely. How is subcontracted work covered for construction defect? That's the number one question. The other ones may include issues of, hey, what is the exposure basis? What kind of sub-cost sales or payrolls were you using in putting this price together? That way you can avoid the big audit at the end in case somebody comes in looking too low from a cost point of view. Because a big audit is just as bad as an uncovered claim, Mike. I mean, I've seen builders look at 6-digit audits and, they still haven't filed their first claim. I mean, that's a pretty horrible situation too. In the industry, we use something called the total cost of risk. That's premiums plus unpaid claims plus audit. So all 3 of those have to be attended to. One other question from a claims point of view might suggest what kinds of warranties and or ironclad promises were made to obtain this quote. In other words, what requirements were represented to the insurance company to obtain this quote? We've been seeing this in the builder's risk area where people are quoting work that's under construction for perils of fire and theft and wind and such. And they get the quote. They know it was a difficult project to insure, and they really didn't read the fine print requiring the fencing. They didn't read the fine print requiring the 24-hour security guard and lighting and monitoring. Now the requirements are adding up to $100,000, and you wondered what happened. So those are the key areas, keeping it real simple and succinct, that I think are generally overlooked that need more attention.
It seems like the devil's in the details, hidden in the words.
When it comes to money, it always is. I like to say that insurance is a contract, okay? And even though the insurance company has the burden of proof, if there's a doubt in the language, many times you just don't know until you're in front of a judge years later. And we have a situation like that I'm helping one of my clients with, John Cook out of Tennessee, who has given me permission to talk about this a little bit. We won't mention the insurance company's name because it's in litigation, but it's not an uncommon case. We're dealing with an insurance company who's effectually excluding construction defect. And John had a case where his flooring installer didn't consistently use a vapor barrier, and thus you had buckling in some of the homes. And we know how many homes. We know that John's gone out and proactively try to mitigate the situation, but the insurance carrier is saying, no, we're just flat out not participating. Well, hold it. That's subcontracted work. What happened here? And he even had a special endorsement indicating what that construction defect is an occurrence in his state. And so I'm kind of wondering, how's this going to go? But again, we can have two carriers with the same contract. One carrier will behave differently than the other based on executive direction and decision-making too. And so sometimes you have to take your carrier to court, and that's probably what's going to happen. So
Help me understand this. So I'm looking at insurance as an umbrella. So me as the production builder, I've got coverage. Let's not get into the minutia of what coverage yet, but let's just say overall, I've got Treacy approved coverage. But now I'm hiring trades to work for me. So in this case with your buddy from Tennessee, from Knoxville, it was the subs that got the builder into trouble. Would those subs be carrying their own insurance as well? And I guess from a production side, should I make sure that my trades are carrying insurance?
Well, you hit one nail on the head, so to speak. That trade had insurance certificate represented to John. Did John have a copy of the policy, and did he know how to read it to see that his kind of work was covered? No. And most production builders are only collecting certificates and maybe an additional insured endorsement when the policy of the subcontractor itself may exclude tract building, multi-unit building. And that's a very common exclusion for many of the subcontractors out there, or there's other conditions that may apply. The builder's insurance agent, the builder's risk manager, if they're big enough, should be reviewing full policies, full general liability policies for sure, just to make sure there isn't an endorsement that will preclude coverage when it's needed most. So the sub doesn't have the assets to support the claim. So the insurance was critical, but it chose not to cover the claim because of the contract language that no one knew about until after the claim happened.
Let's use John as a case study. And when I was a kid, there was a TV show called Time Tunnel where they would jump in the tunnel. We're taken back in time. If John were to do it all over again, what would he do differently? And I guess in conjunction with speaking to you, for you covering his ass, what should he do moving forward?
So I'm a consultant for John, okay? And I work for John in his captive capacity. So he has his own insurance company. That's where he has his warranty program. And I was defending the warranty program. I'm going to give you some context first. Defending the warranty program against claims that should have been covered by his commercial general liability policy, okay? And so if John went back in time, he wouldn't have had a clue what to do because at the time that carrier was covering those types of claims, okay? It had a good reputation. But according to the agent, they had a change in management a number of years ago, and John hadn't any activity and didn't know any better to challenge the company or raise questions or to take a competitive quote. So you have the same kind of contract from 5 years ago, just being interpreted differently. That's a tough situation. Maybe, again, requiring your agent to take competitive bids, fully understand and explain them to you every 2 or 3 years isn't a bad idea.
Is that something you do regularly? Like you call up your clients and say, it's time for our review of insurance? And I don't mean that as an opportunity to upsell them, but as a policy review to make sure their ass is covered in a changing climate, as we said, that is more litigious every day?
A retail agent, I'm not a retail agent with John, but what I would say is that you have to provide multiple options to understand the environment you're operating. The insurance market here in the US has hardened over the last number of years for general liability involving residential construction. So when you know a market is hardening, it may be more work, but it's probably to your client's benefit to at least every 3 years obtain different quotes from different carriers. Doesn't mean John had to go out and find a new agent, but and if he was unsatisfied with his agent, he certainly would have. But uh, I feel that the agent every couple of years should do that. It's difficult to know in certain states if there's grass greener or browner on which side of the lawn.
Building is a bottom line industry, if you will. So the builder's always conscious of his costs. They're trying to make a profit. Do you see anywhere from a risk standpoint that where they're leaking margin as a result of the insurance?
Well, I know my friends in certain industries aren't going to care for me on this one. Builders should really self-insure their warranties. Many times I'm seeing warranty companies out there charging anywhere from $1 to $2 per thousand of value, or per hundred of value. I can't remember, it's 1 to 2% of the value of the home for a warranty. And I don't think that's appropriate because I happen to know the loss ratios are much lower than that, especially for production builders who have a formal customer service program, a formal trades tracking program for the subcontracts, a formal QA program, documenting the quality assurance steps of the home. Your loss ratio is going to be much, much lower because you've mastered that area, and you can save a lot of money either by just self-insuring your warranty or putting it in a captive if your volumes are big enough. That's an area of leakage. The other part is many builders, say 100 homes or more, 50 homes or more, really should be taking on higher deductibles, whether it be on the builder's risk side or on the general liability side. They're looking at $1,000, $2,500 deductibles. You should be looking at $10,000 and upwards, subject to an annual cap. That can carve a chunk of premium out too, and then again self-insure the lower end. And the reason I say that, particularly, Mike, in this case, is that every time you file a claim, it's going to be held against you. And so if you're turning in little claims, in insurance, we say frequency breeds severity. Underwriters look at that and they say, well, it may not be a whole lot of money, but they're having 3-4 claims every other year. We're going to really increase the price on this thing. So you want higher deductibles, not just for some cost savings, but you'll be avoiding premium increases that would otherwise happen should you turn in the claim.
Is that typical that builders will get insurance on the warranties that they offer?
Yeah, absolutely. There's 3 prominent warranty companies, maybe 4, and they, I should say, it's over half the market share.
Wow.
Well over half. I mean, I'm not talking about the top 10 briefcase builders. I'm talking about the folks that are still privately owned.
If a production builder were to structure this properly, let's say over a 3 to 5 year span, what realistic improvement in net would occur?
Well, I mean, if warranties typically, let's say 1% of the home, warranty and say deductibles, 1% of your gross sales volume is a big number. 2% is actually the goal. And it's achievable if you have an integrated risk platform, as I like to call it, something where you know what you're self-insuring and what you're not. And you have somebody that's deliberate in defining that line. I think you can do pretty well. Improving your bottom line by 2% on sales is a big number.
Let's get into some of the terminology here. Tell me what captive threshold means and how does it apply to a builder? Again, let's use that incremental. Maybe they're doing 100 million, 40 million. Is there a break point based on the amount of revenue that they're generating?
I'm glad you asked. It depends on what your expectations of the captive are. I've set forth something that discourages smaller captives. And the reason is that many of the smaller captives have to buy reinsurance or pool risk to qualify under IRS rules. When you do that, you're not in control of claims other builders file. That can be problematic. And a couple of my clients have been in that situation, and we migrated them to their own not reinsured, not risk pooled, captive, but something where we look at total control of both expenses and claims. And we certainly have third-party risk. I mean, all the homeowners that we warranty are third-party risk. So we certainly meet certain thresholds. And we have a pretty good distribution of risk. So we have like diversification in a stock portfolio. We've got good distribution of risk. But you can't do that unless you're willing to put at least a couple million a year in premium in something like that. And so when you look at 50 million being a good threshold for a production builder, that's where I think you can realize some risk leveling advantages, some insurance and warranty cost savings, and some tax deferral, just incidental to the whole purpose of, again, leveling risk. And that's just looking at the commercial insurance aspects. I tend to introduce business risk aspects that are very insurable, but the commercial insurance industry just hasn't played with yet. For example, everybody years ago was complaining about the cost of lumber spiking. Okay, I think you remember those days. And when that happened, I was on this committee with NEHB, and our only answer was, hey, buy futures. Well, that's pretty risky too, you know what I mean? So why not have a captive where you write your own policy that says, hey, we'll pay out if the lumber varies in price more than 5% in a given month? There you go. So we can write things simply and easily inside your own insurance captive that commercial insurance just won't go and look at.
Would that be under the heading parametric coverage? Is that what you would call that when prices increase?
That's right. It's a two-dimensional type of if this, then that. And again, these are risks that the builder can't in any way control, because you don't want to see people insuring stuff and then turning around just pulling money out of their insurance company because they want to. It doesn't work that way. But yeah, no, there are any number of things that keep builders up at night. And that can be, a change in their terms with their bank, or, their line of credit gets closed. Those are all events that they can't control that we can model and insure and make sure that, the regulators are approving every one of these coverages and all of the math behind it. But the key is, hey, saving for a rainy day doesn't have to be done in a vacuum. It can be done with professional help, and it can be done in such a way that you can fully utilize the expertise of the insurance industry.
Let's unpack this a bit more. This parametric coverage that you're talking about, what does it cover that, let's say, traditional coverage doesn't? Like, where do they differ? And obviously, you're recommending that you have both.
Oh, yes. No. For example, when we integrate a captive with the commercial insurance, for example, we're covering deductibles that otherwise have to be paid by the builder. So we have a set-aside deductible reimbursement program, or, for example, the warranty program, or a construction defect program. The different things that we say, okay, this isn't going to be covered by commercial insurance to a point, and this is where the captive takes over, okay, or fits. That's integrated risk management. Now, when we look at these types of non-commercial insurance risks, okay, then I don't say they aren't commercial insurance. I mean, this is business risk. It's just where the insurance companies generally aren't willing to go because they don't have enough builders doing this kind of coverage. They don't have the way to pool risk. And so the builders want their rainy day fund. And in fact, if they are both, in a sense of the word, the insurer and the policyholder, they can't lose in the long run, right? So here you go. You have the ability to establish reserves in an insurance company for risks that commercial insurers choose not to recognize or just choose not to participate in. And again, that can be banking risks, materials risks, supplier and vendor risks. Subcontractor default is one of my favorite. Another one that we like is a variation called non-damage business income and extra expense. So if you have a delay on the job site, out of your control, it gets paid for, the carrying costs. You see, so we try to figure out what keeps you up at night as a production builder and to give you a way by which to kind of mitigate the ouchie, okay? And it does require a little training to recognize the risks at the staff level, but it's a simple question. You don't have to train anybody to be an insurance expert. It's just Ask the question, in a perfect world, what would have gone better with this project? And then you'll see what's insurable.
It just seems like this is such a quagmire because when you said certain companies will not participate or don't participate, then me as a naive production builder, I'm coming to you for advice
Mm.
and you're selling me a policy, you're telling me what I need. But there are elements that, as you said, they're not participating in. So my hairy ass is exposed. I don't even know it's exposed because they're not even telling me. So
Well,
it's almost like I have to do my homework first to even know what questions I have to ask.
that's where consultants come in. I'm afraid that we do have a purpose. We don't sell anything, we create things. Okay. We listen, we know the questions. I work with commercial insurance agents all the time on the builder's side of the fence so that the builder can tell me in plain English, hey, this is what's keeping me up at night. How do we take care of this problem? And then I would understand what the commercial insurance side, that the general insurance industry is willing to do and what we would have to do independently of them. So it's knowing, again, the big question, what keeps you up at night? What went wrong on your last project? And then the commercial insurance agent, can we insure that? Is it worth it? Sometimes, by the way, when you look at certain types of bonding, you can insure, in a way of speaking, through bonding, some of the crazy stuff that you might otherwise self-insure. But keep in mind, that premium is going to a third party. You'll never see it unless you file a claim. Okay? So I look at the cost saying, okay, do you have the expertise as a builder to understand the risk to the point where we can self-insure it? And if not, then we have to look at the commercial insurance industry and say, do they have the expertise and is it worth it?
You use the analogy, what keeps you up at night? To which I respond, I sleep like a baby. But I suspect after having a conversation with you, that's when the nightmares are going to start. So,
That's so, yeah, Mr. I am like Freddy Krueger in the insurance industry. I just heard that. Yeah.
okay, so instead of scratching the blackboard, let's go back a step. Let's look at a scenario, and we can treat it as a case study if you want to pull a name in. But just generically speaking, I'm a contractor. I've been doing plumbing or pouring concrete, and I'm at that point now where I'm stepping out on my own, and I'm going to start my own small building company. And I'm poised to do, let's say, under 10, let's say 0 to 10. Okay. That's the first threshold. And I come to you and I say, Treacy, what do I need? So tell me, what would be the basic things that you recommend? But then on the other side of the coin, what are the things that I don't even know that I don't know that I need?
Well, this is one of the reasons I created on-demand education for contractors and builders, because that's a hard question for me to answer universally for everybody, but I'm going to take a stab at it. If you're going to have workers, you need work comp. If you're going to have materials on the job site that are either waiting construction or going to be under construction, you need builder's risk. You need general liability coverage in the event somebody's unhappy with you or there is job site entry that isn't covered by the subs or the work comp, which does happen. You may want coverage for your office and or your storage location and your equipment and tools, and that would include coverage for interruption and not just coverage for the tools and the equipment and the office. Of course, you're going to want vehicle coverage, and you may want to do that commercially because there's a lot of things personal auto will not cover when you look at a business use. And so those are the basics. Any commercial agent is trained and will easily tell you and sell you or what is insurable at the 0 to 10 level.
Okay. And then the other side of that equation is some of the things that they don't know that they don't know.
Well, they don't know that warranties with alternative dispute resolution language are a great thing to mitigate general liability. That's not something you necessarily have to buy from a third party, but it's something they need to know. They need to know that the subcontract that they use, and if they don't use it, the subcontractors can have insurance, but the builder won't be an additional insured unless you have a fully executed subcontract in place before you start work. And that subcontract needs to be appropriate to your state and reviewed by an attorney and contain insurance requirements and hold harmless indemnity and defense language. You should have a way by which you document the quality of your work during the work process and upon delivery. And then your customer service program, you really need to document outcomes and have customers sign for them so that you have a rigorous digital record that will discourage somebody who preys upon builders and contractors who don't keep records. Those are the things that you'd want to know that are beyond insurance at that level, that if you start early, will really mitigate larger risks later.
Yeah, I'm still intrigued by the parametric idea here. The worst case scenario, the waters are rising, clouds are dark. Let's say mortgage rates go up 150 basis points, lumber increases 25% over the next 90 days. How exposed is the average builder versus the one that's taken the time to prepare? How vulnerable would they be? And who survives the scenario and why?
The rainy day fund is the survival tool, unless you've got money held back for a bad day, no matter what the cause. I mean, when we look at 2007, 2008, right, we were dealing with some really bad days and scared the tar out of a lot of people. And those people that had a war chest or a rainy day fund were the ones that carried on. The rest of them went out of business. How you structure a rainy day fund or a war chest is very important, because if you're just kind of loosely putting it in Bitcoin and letting it ride for a little while, you don't know what you have when you need it most. Okay. And you probably overpaid in taxes and other expenses associated with it because you didn't keep track of it. So it's really about being prepared. And the parametric coverage is just a way of structuring that war chest or rainy day fund in a way that's professionally managed with exacting reserve requirements. In other words, how much money should you put into a rainy day fund, Mike? Well, we actually know, depending on what we're saving up for. That's where actuarial sciences come in, because one of my little talents is I say, okay, this is what you want. I go out and find the data. I figure out roughly what the model is, and then I contract actuaries that do this for day-to-day and type of deal. And they tell me what the numbers and the range of numbers would look like and why. And I said, is this explainable to a regulator? And usually it is. And I say, okay, I'm going to write a policy around that. That's how it works. But each type of event can be that rainy day. Just like you said, mortgage rates go through the roof. Worse yet, here's the one for you that most people don't think of, is mortgage rates are right where they are, but no one's willing to lend money. Okay. There is a mortgage cost index, the MCAI, that bankers use to indicate whether or not mortgages are being underwritten either tightly or loosely. Okay. And that's a hidden one. Okay. So yeah, you kind of have to, again, as a risk management person, I want to understand the business model, because that way I can say, okay, well, did you think of this? I can scrape the chalkboard, as you put it, and see if there's some interest in the builders setting aside money and how much. The beauty of having your own insurance company is you do have tremendous input on what you do and what you don't want. Rather than somebody selling you, you're making an educated, informed decision as to your reserves, as to how much you want to set aside and why. With the input of actuaries, you can do wonderful things.
Treacy, there was something you just said that sparked a thought in my head. So the podcast Builder Straight Talk, we're a parent company of Sound Capital. It's like Mustang would be a division of Ford type thing.
Right.
And so they pay to keep the lights on. And one of the things that's happening now across the U.S. is banks are overextended in their portfolio when it comes to home construction. And so from an insurance perspective, here's a scenario I'm going to run by you. I'm a track builder. Let's say I've got a 50 track project in the works. I've got 10 almost completed. I'm rolling into my next 10 because I'm doing 10 at a time. And then when I go to get my next draw, the bank says, hey, Treacy, we can send you a calendar, but you ain't getting no money because the Fed told us we're overextended. So what happens in a scenario like that? Because I see this as a compounding effect. I don't even know how you put a price tag on it, but I've got suppliers I've got to pay. I've got trades that I've got to pay. And if I don't come up with the cash, they're leaving to the next project or to work with my competitor. How do you even put that in a bundle to protect me? But more importantly, how do I pay them?
Well, foresight is the key word, because if we have a storm, as you've described, coming on the horizon in the near term, you can't save enough quickly. Okay. I think that your listeners are well advised to just immediately start setting aside money and not spending it on jet planes and boats and things, given what you said. But this is the environment we witnessed in 2007, 2008. We saw, the government picking winners and losers of the banks. And we had a really big bank out here that was heavy into residential. A couple of them were basically told, you're going to go home and you're not going to exist anymore. And we had some East Coast banks take them over. It was a terrible situation. So when we look at anything even coming close to that, that's scary. My clients have had the chance over the last 5 years or so to set aside money for this in a policy that would take care of the costs associated with a line of credit basically being compromised by the bank. And it could be construction financing, et cetera, but any impact on your credit is an actual coverage that we designed and wrote, but you can't save up for it in 1 year, right? And it's not pooled risk. Again, this is a form of self-insurance. So you can't rely on other builders to put money in, like traditional insurance, so that, when you have a claim and they don't, there's enough money to pay out. The captive world doesn't work like that. We don't have a commercial insurance coverage for what you've described, because it's very difficult to pool that kind of risk. And you just alluded to the reason why, which is if it's going to happen to one builder, it's going to happen to all of them. Okay. So that's a different that's an element of risk that we call that a concentration of risk. And we tend to avoid those as commercial insurers. And then if you're a captive insured and you're a single parent captive, which is where you are your own insurance company without significant pooling, then you're going to be dealing with a need for years to save up for these kinds of parametric risks. Okay. And yes, I think people are going to suffer under what you've just said. And some of the better capitalized builders are going to be acquiring some of the smaller or less capitalized or overextended builders. And this is where having public access to money is a pretty interesting tool to survive the banking. You can raise funds in the public sector sometimes. Sometimes it's hard money or other, shadow banks that can do a good job too. But being prepared for what you've just described can involve captive insurance with enough time by which to collect the premiums.
Do you see more of that happening, or is that just me, Treacy?
You mean the disaster that you described?
Yeah, with the banks cutting back, being told to cut back.
Not as severely. No, they're not being told to just focus on residential construction. I think you're dealing with more of a macro directive than something that was as specific as we saw in 07, 08.
Yeah, the numbers I was told, it's something like 30% right now across North America. It's happening. So not to make it into a sound commercial, but it's a perfect segue. The benefit of working with Sound Capital, because it's insurance-backed funds, that money is put in escrow. So if the builder was guaranteed a $2 million or $3 million loan, by law, that money is sitting in an escrow account. They'll never have to stay up nights unless they're working with you to worry about getting that next draw, because it's sitting there waiting for them to pull. So
that's fantastic.
Yeah, quick plug for Sound. Anything that we've missed along the way here, young man? Anything that you want to delve into?
Well, I want to make sure that builders understand this is not just about relying on other professionals. They have the opportunity to get educated. I am going to plug my little education organization, cirelearning.org, CIRE learning.org. Builders can take courses they can understand, and they don't have to take them all at once. They can take them when they want. They can listen to them driving to the job site. So, there's just things that involve knowing the right questions. I think you really did a good job of saying, hey, what questions don't I know? Well, this is where the course goes. And I like telling stories, as you'd like to say, and it's presented in a real world format. And then the other thing is, if a builder is looking at captive insurance, I tell people to be careful not to go with the cookie cutter. I think ground up, custom approach with some seriousness is the only way to go in the long term. We're not advocating tax havens. We're actually interested in leveling risk, making sure that risk is addressed in a professional way beyond what commercial insurance can or should offer.
I'm going to do a lane change here, Treacy. It's something I call rapid fire. And I want you to buckle up. I'm just going to bombard you with a series of questions. I don't want you to think just the first thing that comes to your brain and let it shoot out that mouth of yours. The one that's
my dad
keeping
was a
builders up at night.
psychologist, so yeah.
You ready?
Yeah, I am.
Okay, so what's the one risk related to habit that disciplined production builders consistently do better than average builders?
Design.
Okay.
They know what works and they've done their market research.
What is one insurance misconception you wish every builder could eliminate immediately?
That when you file a claim, you're getting your money back.
What metric should every production builder track monthly that most are currently ignoring?
Customer dispute resolution.
Okay. I'm going to do lane change. This is more personal now. When I finally get a rare hour to myself, the thing I enjoy doing the most is?
Exercise.
Okay. The one place that always helps me reset, reflect, or think clearly is?
Kayaking.
Cool. I do that too. A book, movie, or quote that stayed with me longer than I expected is?
Vanity. My favorite sin. The devil's advocate.
Okay. Do that one more time.
Vanity. It's my favorite sin.
God, where's that from?
The devil's advocate.
Oh my
Keanu
gosh.
Reeves.
Okay.
Yeah. Yeah.
Devil's advocate. What, that was De Niro?
No, the other one. Al Pacino.
Oh, right.
And Al Pacino is playing the devil in that
Reeves.
one. Yeah.
Yeah. Okay, cool. Last question. What a thoughtful gift. As I unwrapped the package, to my delight, I found a
Picture of my mother and father.
Oh, that's sweet. That's sweet. Treacy,
It just happened.
Yeah,
So-
before we land the plane, anything that you want to add?
Well, based on what you said regarding the banks wanting to flex their muscles and or be mowed over by the Fed, depending on your point of view, I wish the best to the audience of production builders out there. I've been working all of my professional life to help you, and I'm wide open for phone call or anybody that needs a little more advice on a specific problem. I'm usually brought in as a problem solver. And I don't sell, I just listen.
So your contact info will be in the show notes, but give your 10-second elevator pitch one more time.
Well, if you have a problem that you need a builder-based opinion on from an insurance perspective, give me a call. I've worked all my career trying to move this industry forward in spite of the insurance industry, and I'm dedicated to good listening and good questions.
I guess one last question. We really didn't get into what exactly it is that you do when you do it. So I'm a production builder. I've got my policy. Maybe it's coming up for renewal. Maybe I've heard that I need to, in this case, add to it. I dial 1-800-TRACY. You come out. Do you evaluate what I have in my hand initially? Do you charge me
Not at
for
all.
that? How does that all work?
No. That's not my kind of consulting.
Okay.
I would work with your current insurance agent and say, hey, I've been brought on just to ask a few questions and see if there's a captive insurance or an education opportunity here. Sometimes that retail insurance agent is going to be looking for better wholesale connections. I can certainly point them that direction. But no, I do not per se consult on the retail side, nor do I distribute insurance to the builder directly. I'm an industry insider. And so I can't do that and be an outsider at the same time, right? So no, seriously, the integrity of that is important to me, where I'm not selling. I'm asking questions, I'm educating, telling stories, connecting people to resources, whether it be attorneys or actuaries or claims adjusters. People that need something of an inside track are the ones that tend to call me and appreciate what I do.
So again, to be clear, me as a production builder, I don't have access to you, but could I call up my broker, Freddie Krueger? We keep you up at night, and they call you. Is that how that works?
No, I would basically ask you who your insurance agent is and work with them, okay, as opposed to being an alternative to your insurance agent. That's not my goal at all. Again, I take a very consultative approach. So I'm not selling. I'm listening and I'm asking questions that relate to the problems that either are top of mind or ones, maybe you don't know about. But that phone call is really about what keeps you up at night or what doesn't and why, and who's your current team and how do we fit together.
Treacy, my friend, I'll be sleeping peacefully thinking of you tonight.
Well, I won't, given the banking stuff you just talked to me about.
Good. So it's about time somebody turned the tables on you. Very good.
You did it.
Thanks
Thank
again.
you, Mike.
You take care.
Thanks for listening to Builder Straight Talk. Make sure to like, comment, and share this episode on your favorite social media platform. And don't forget to subscribe to the podcast, available wherever you get your podcast streaming fix. Until next time, keep building smarter. This episode is made possible by our parent company, Sound Capital, funding built for builders.